You own the stock. What do you need to hear from Jensen tonight?
And that's the key. He's going to have to do a lot of hand-holding, I think, to play to some of those sort of rising debates that we've had in the market, to be honest, for the last 8 months. The stock's basically where it was, back in June of last year. So we want to hear that, those supply issues around Blackwell are easing, and we're going to get a very aggressive ramp into the back half of this year. And then we're going to have to address those debates around, the scale of AI capex today, and then the monetization, the ROI, that this capex spending can continue not just through this year, which we've heard from a lot of their customers, but into next year and beyond.
What, level those for us. Are you more concerned about demand? Because for many, we were vindicated that hyperscale demand certainly still lives on if you look at any of their numbers and their capacity orders at the moment. But the supply side, I suppose, has been the question with Blackwell, and indeed whether they continue to access China with H20s.
Exactly. So there's a couple of things to unpack there. So, I mean, from a demand side this year, we're feeling pretty comfortable. We all know it's a supply issue. The debate is more longer term. And then, all of those kind of concerns that came out of a DeepSeek that actually we need a lot less, capital spending on training in particular. Actually, we've seen, the classic Jevons paradox. I really hope that everyone in his family is getting $1 for every time we take William Jevons' name. But, we are seeing actually incremental demand out of even China. And we heard that from Alibaba, who's going to be spending, as much in the next 3 years as they did in the last 10. So it's more about, near term, will there be further restrictions on US exports of chips and particularly AI chips into China? And then that longer term debate as to, can we see, what levels of growth are reasonable to think about for the company into the years to come?
Richard, there was a TD Cowen report earlier this week that showed that Microsoft might be pulling back on some of its data center leases. Is this a short-term blip, or are you more concerned about deeper warning signs there?
Yeah, I think that was misconstrued. I think there are a couple of elements there. Microsoft's been very supply constrained, and we're very aggressive at taking up, a huge amount of leasing a data center sort of capacity, which they're now sort of optimizing. And the other factor was obviously, we saw the news around, what's happening with Project Stargate and the reimagining of those terms with between Oracle and OpenAI and Microsoft, where a lot of that training capacity is going to be built for OpenAI by Oracle and not by Microsoft. So again, that's just in our minds, just a sort of a reimagining of kind of the trajectories of where that capital spending needs to go, rather than anything about sort of broader AI capex.
Let's talk reasoning, because Anthropic released its reasoning model yesterday. A slew of other companies have been doing the same. These rely a lot on inferencing. How much of NVIDIA's growth going forward is going to come from inferencing versus GPUs that train?
And I think most people, including Jensen, would expect this market to be larger than training. I mean, at the end of the day, we need to see that monetization and return on spending of all this training capex we had in the last couple of years. That's going to come from all of us using more AI services and products in the next few years. And that's going to require a significant step up in inferencing capacity. And you're seeing different companies come at this in different ways. So, Microsoft is much more focused on wanting to do inferencing capacity. You've seen an Oracle much more willing to invest in that training capacity. But I think we're going to need both. But as we look forward to the next few years, we're certainly more excited about the inferencing growth and capacity ramp up in the next few years, as hopefully we all start using these services.
What's so interesting is the frenemy discussion around this industry, because you also hold the hyperscalers that are busy making their own chips. Amazon, one of them, we just heard from Andy Jassy saying how they are the biggest spender on AI, and in part of that is their own chip capacity that they're making internally. How much of a competitive threat ultimately is that for the likes of Nvidia?
I think there are a couple of elements there. One is that, it takes about 3 years to design a chip. So if you're sort of 2 years and a bit after the launch of ChatGPT, to actually have chips that have been fully designed in a post-ChatGPT world, we're going to start seeing those from later this year. The new Google TPU, we got the new Microsoft chip coming out next year. We got chips from Meta, from OpenAI as well coming. So I think we'll see the full spectrum of what the hyperscalers are actually able to design over the next 12 to 24 months. And those will be much more competitive with NVIDIA. We still think that competitive kind of intensity is much more on the inferencing side than on training. NVIDIA still has a huge amount of advantages, not just in the GPU, but in terms of networking, in terms of software that it can bring to bear, and on the rack level, on the liquid cooling side as well, on the rack level with Blackwell and then into Rubin. So we still think that they have a strong position there. But inferencing will just naturally be more about the cost of ownership, reducing power, and also reducing reliance on a company like NVIDIA. That's certainly in the strategic mindset of these hyperscalers as well.
Just going back to the hyperscalers and to Amazon and what else it provides, consumer AI finally evident when it comes to Gen AI being infused into Alexa Plus today. Richard, what did you make of the announcements?
Yeah, and I think that's an important part of when we think about, training up proprietary large language models. I think, DeepSeek kind of showed us that, how far forward open source models have come. And actually, if your business model is to try and, monetize a proprietary model that's maybe a little bit better than someone else's proprietary model or someone else's open source model, that's going to be a pretty tough game to play in. So companies that can really take generative AI advancements and really monetize them by having, distribution to billions of users or having a very strong ecosystem that they can roll those products and services into, for us is a much more natural way to be able to monetize this technology. So, Alexa and I think a whole host of ways that Amazon can monetize that, both on the consumer side as well as on the cloud side. Again, that's why we think that's a very interesting company in an AI world.
Richard, zooming out to Washington matters for a moment, what kind of assurance do you need from Nvidia today to make sure that the company isn't getting caught in the crosshairs between Beijing and Washington?
Yeah, well, we've been dealing with that for quite a few years, and I think Tim Cook probably could have a role at the UN after stepping down from Apple in years to come. But I think that's just going to keep going. I mean, we know that AI is the front line of the sort of superpower sort of supremacy battle between the US and China. It's going to continue to see ongoing sort of restrictions around that. And so there's likely to be further moves made to restrict China's access to this technology. And they will make their own moves to try and localize that. So, we've already seen some major impact to that business. And already seen a major impact to the China sales of that company as well as many others. We expect more to come. And again, that's where as active managers, hopefully we can help navigate some of that by talking to people in Washington and getting a sense of where this might end up in terms of not just the risk, but also the opportunity.
As active managers, you have to navigate the volatility that has been present in this stock. How much do you think you are in for the long term when you're seeing sudden questions around the longevity of the demand and supply side?
Yeah, and that's where owning a stock is very different to being a technologist. We're thinking about what are the expectations of the market over the next few years, and are those reasonable? And is the price being paid for that earnings power reasonable as well? So it's not just about the franchise of Nvidia or how well they're doing, but just thinking about is the market being reasonable about pricing that opportunity into the stock today? And I think that's where having a cost of capital is actually good, because actually I think we've seen a lot more rationality around Nvidia as well as many other stocks related to this opportunity, very different to 2020, and also why the stock has been in a digestion mode since June of last year. And I think as we start rolling forward into Blackwell and then into GTC next month, when they talk about the longer term roadmap and the longer term development of this technology, that's going to give us a much better sense as to from here where this stock can go.